speaking of the U.S.-China trade war, we have seen the flow of investments from the U.S. and China fall dramatically, and a lot of China-based or even China-linked fund significantly pare back their investments in the U.S. So how is this affecting the environment in Silicon Valley right now?
Yeah, I think there's definitely a big impact about this in the Valley these days. There are, from my personal view, there are three levels of impact. The first one is definitely sentiment level for a U.S. startup or a U.S. investor, whether they need to get foreign investment, especially China investment, has become a question. And then a lot of startup CEO would never think about this before, but now starting from last year to this year, when investors or Chinese investors approach startups, and then the first question for startup CEO will be, should I get money from China or not? So sentiment-wise, definitely there's a big impact. And from business level, whether to do business with Chinese customers or Chinese partners also has become some sort of difficult or challenging questions to the startup CEOs too.
And we'll be continuing the discussion on the AI front. Right now, the AI conference is actually kicking off right now. We are seeing the Shanghai Party Secretary speaking on stage right now. We're getting live images from that. Now, you were talking about this challenging environment where entrepreneurs are having to ask themselves in Silicon Valley about, can I take this investor's money? So has that been more difficult for you? Are you seeing entrepreneurs actually refuse money from Chinese investors?
Yeah, so I think there are, in a way that they just don't want to get into trouble, especially for a lot of young entrepreneurs who never had experience dealing with foreign investors before, or who never had been to China before. China to them is like a foreigner country. For a lot of experienced entrepreneurs or mature entrepreneurs, I think things are different. They know they need China from manufacturing perspective, from a customer perspective, from market perspective. So I have seen kind of two different scenarios when it comes to startup CEOs' mindset.
And you have LPs who are Chinese as well amid the worsening relations between the two countries. What are your LPs saying? Do they still want to invest in Silicon Valley's top companies?
Yeah, I think compared with 3-4 years ago, LPs are holding back from investing in US, that's for sure. Most of the reason just because they don't think US startups or government welcome foreign investment. So a lot of them are looking at Canada, Israel, Europe for investment opportunities. So when I was in the Valley, for the past few years, there's always a lot of visitors from China to go visit US startups and then try to learn from the innovation there. Now things have changed. This year has been very quiet because people start to travel to London or Toronto or Israel, Tel Aviv, rather than going to Silicon Valley. So there definitely has been a big change.
Amy, there's been a lot of talk, obviously, this week about decoupling the economies, the Chinese and the US economies. Are you seeing this in the technology sector? Are we essentially going to see two internets? And what are the implications then for investors? Yeah,
so, when I started Hemi 3 years ago, my belief is innovation should be global rather than local. So that's why you see companies like Uber, Airbnb, when they came out, their business can expand globally for no problem. These days, especially this year, I think there are sentiments or pressures from the government level or I think the geopolitical level that innovation should just be local. So if innovation is in US, it should stay in US and should not go to some other countries, including China. So things have changed. I think right now a lot of investors are worried that when they invest in a startup in US, the market will just only be in US, or when they invest in a company in China, the innovation will just only be in China. And I think that's a sad thing. But we just have to adjust our investment strategy.
So that's the new reality and something that investors have to be prepared for. I know you're interested in mobility. A hot topic, obviously. You've got Uber and then you've got Didi, which is obviously the predominant player in the Chinese market. Are you concerned? You want to invest in platforms where the cash burn is so intense and there is no sign of profitability? Is that something you have stomach for still?
Yeah, so I think that's the part of the reason for the growth of Uber and Didi. Just in the past few years, there's a lot of liquidity in the market. So the startups can't afford to burn a lot of money to go for the growth. I think things will change this year because, again, the economy, the potential economy recession, or I think the more conservative investor perspective. So I think startups need to be prepared for this year that if they have a burning money business model, it will not last long. We have seen some of the mobility startups have got into trouble in this year because they ran out of cash. And I think there will be more companies, again, without a legit business model, will get into problem this year.
Right now, all of Hemi Ventures startups are based in the U.S., but given the trend you were talking about as where technology is becoming more local rather than global, how are you looking at the Chinese market right now?
Yeah, so when I started Hemi 3 years ago, I'm very passionate about innovation in US. So that's why we started our company. Right now, again, because of this new trend, I think we're changing or improving or adjusting our strategy where we want to invest still in the best innovation in the world, which includes China and also which include US, but also China. So we are launching a China fund this year to invest in the Chinese startups, again, to catch the upside for our investors.